People keep asking me about Bitcoin. They see it at $97,000 and they want me to admit I was wrong. They want me to say, Charlie, you called it rat poison squared, but look at the price, you missed it. And let me tell you something, I didn't miss anything. Because understanding what Bitcoin is and understanding why the price is going up are two completely different questions, and most people confuse the two. Let me be very clear about something from the start. I still think Bitcoin is worthless. I still think it is a combination of dementia and immorality. I still wouldn't buy it at any price, but that does mean I don't. Understand why other people are buying it. Because here's the thing that most people miss. The Bitcoin price isn't going up because Bitcoin became valuable. Bitcoin S price is going up because the dollar is becoming less trustworthy. And that is a much scarier proposition. Let me walk you through this, because I think it is important, and I think if you understand the pattern I am about to show you, you see the current moment very differently than most people do. I remember when I was a kid I could buy a hamburger for 5 cents, a nickel, and minimum wage was 40 cents an hour. I've seen a tremendous amount of inflation in my lifetime. Did it ruin the investment climate? I don't think so. But it sure as hell changed what money means. And that inflation didn't happen by accident. It happened because democracies are prone to inflation. Politicians will naturally spend because they have the power to print money, and they will use money to get votes. That is just the incentive structure. That is just human nature. You can vote yourself rich. It is an idiotic idea. But every democracy tries it anyway because the alternative, telling people no, we can afford that. You'll have to pay for it yourself. That is political suicide. So what happens instead? You spend more than you take in. You borrow the difference. And when the borrowing gets too expensive, you print the money. You debase the currency. And you hope that the consequences come after the next election. This has been going on for my entire adult life. But it has accelerated dramatically in the last couple of decades. And it is accelerating even faster now. The national debt just passed $36 trillion. Let me say that again. $36 trillion. When I started practicing law, the entire federal debt was less than $300 billion. Now we add more than that every single year. And people act like this is normal, like it is sustainable, like there won't be consequences. Let me tell you about consequences. Let me tell you about what happens when governments print money beyond their productive capacity. Because this isn't theory, this is history. And history is very clear on this subject. I want you to think about Rome. The Roman denarius started out as 4.5 grams of pure silver, real money, backed by something tangible, and for centuries it worked. The Roman Empire expanded. Trade flourished. The denarius was trusted from Britannia to Egypt. But empires are expensive. Legions have to be paid. Infrastructure has to be built. Bread and circuses have to be provided to keep the population happy. And eventually, the costs exceeded what Rome could afford through taxation. So what did they do? They debased the currency. Emperor Nero reduced the denarius from 4.5 grams of silver to 3.9 grams. Same coin, less value, and once that started, it never stopped. Each emperor debased a little more, and a little more, until by the 3rd century the denarius was basically copper with a thin silver wash that rubbed off in your hand. You know what happened then? The currency became worthless. Trade collapsed, the empire fractured, and the Western Roman Empire fell. Same pattern with Britain. The pound sterling was backed by gold for centuries. Most trusted currency on earth. Britain controlled a quarter of the world's landmass. The Royal Navy ruled every ocean. London was the center of international finance. But World War I was expensive. World War II was expensive. Maintaining a global empire was expensive. Social programs back home were expensive. And eventually, Britain couldn't afford it all. On the 19th of September, 1931, Britain abandoned the gold standard. The pound became fiat currency, backed only by government promise, and that promise turned out to be worth a lot less than gold. After World War II, despite being on the winning side, the dollar displaced the pound as the global reserve currency. Britain retained its currency, but the power was gone, the empire dissolved. And now it is our turn. The 15th of August, 1971. Nixon closed the gold window. He said it was temporary. 53 years later, it is still closed. The dollar became pure fiat currency, backed by nothing except taxation promises and military enforcement of dollar use in global trade. And what has happened since then? Exactly what you'd expect. The money supply has exploded. In the year 2000, M2 money supply was $4.6 trillion. Today, $21.3 trillion. That is a 364% increase in just over 2 decades. The Federal Reserve balance sheet went from $870 billion in 2007 to $9 trillion. At its peak, $9 trillion conjured into existence through computer entries. Not from mining gold, not from producing wealth. Just created out of thin air to fund government deficits, bank bailouts, corporate debt purchases, pandemic stimulus. And now here we are, Bitcoin at $97,000, silver at 12-year highs, the total cryptocurrency market at $3.4 trillion. And people think this is a bull market. It is not a bull market. It is a warning signal. Let me explain what I mean. When people lose confidence in official currency, they do something very predictable. They exit into hard assets, things that can be printed, things that are scarce, things that hold value independent of government promises. In the past, that meant gold and silver, real estate, commodities, things with tangible value today. For a lot of people, it also means Bitcoin and cryptocurrency. Now, I think that is misguided. I think Bitcoin has no intrinsic value. I think it is speculation masquerading as investment. But that doesn't change the fact that a lot of smart people disagree with me. And more importantly, whether Bitcoin is truly valuable or not is almost beside the point. What matters is that people are fleeing dollars for Bitcoin. They refleeing government, controlled currency for alternatives. And that flight itself is the signal. You know what else is a signal? Central banks accumulating gold at the fastest pace since the 1970s. China, Russia, India, Turkey, Poland, Kazakhstan, over 1,000 tons annually since 2022. Why would central banks be accumulating gold if everything is fine? If the dollar is stable and trustworthy? If the system is sound, they wouldn't. They reaccumulating gold because they see the same pattern I see. They see unsustainable debt. They see unlimited money printing. They see a currency system built on promises that can be kept. And they re-hedging. Saudi Arabia accepting Chinese yuan for oil sales. That is a signal. The petrodollar system was the foundation of dollar dominance for 50 years. And it is cracking, Japan reducing us treasury holdings by over $200 billion. That is a signal. The dollar's share of global reserve currency holdings dropping from 71% in 1999 to 57.8% today. That is a signal. All of these things taken together point to the same conclusion. Confidence in the dollar is eroding. Not collapsed yet, but eroding. And once confidence starts to erode, it is very hard to reverse. Now, let me address something directly. A lot of people say, Charlie, you are being a hypocrite. You say Bitcoin is worthless, but you admit the dollar is being debased. So why not own Bitcoin? And my answer is this: just because I don't trust the government. As currency management does need, I think speculation in digital tokens is the solution. I've always believed in owning productive assets, businesses that create value, companies that make things people need and want, real estate that generates rent, assets that produce cash flows independent of what currency you measure them in. Bitcoin doesn't produce anything. It does generate cash flow. It does create value. Its entire worth is based on the belief that someone else will pay more for it tomorrow than you paid today. That is not investment. That is speculation. It is the greater fool theory. And yes, it has worked for a lot of people. Bitcoin has gone up dramatically. Some people have made fortunes. Good for them. But that doesn't make it investing. That makes it gambling. That happened to work out. Ivy said before that I lived in a world with low gambling for decades when I was younger, and I liked it better. I think it was better for the country. Having thousands of professional poker players, what damn good are they doing for anybody? And that is how I see the crypto market. It is a giant casino, trillions of dollars of human capital and financial capital being directed into speculation rather than productive enterprise. That is not creating wealth. That is redistributing it from the less sophisticated to the more sophisticated. But here is the part that should really scare you. The fact that this casino has gotten so big so fast tells you something profound about the state of the underlying currency system. When you have $3.4 trillion flowing into cryptocurrency, that is not just retail speculation. That is institutional capital. That is sovereign wealth funds. That is family offices. That is serious money making a serious bet that the traditional financial system is broken. And you know what? They might be right about that, even if I think their solution is wrong because the Federal Reserve is trapped, completely trapped. They can raise interest rates meaningfully without making the debt service costs impossible and triggering economic collapse. They can lower rates without accelerating inflation and destroying what is left of dollar credibility. They can maintain current policy without losing control of long-term yields. Every option leads to a crisis. That is not pessimism. That is mathematics. The interest payments on the federal debt just hit $892 billion in fiscal year 2024. Think about that. Nearly $900 billion just in interest, not paying down the principal, just interest on money we already borrowed. That is the second largest government expenditure after Social Security, more than defense, more than Medicare, just interest payments. And it is going to get worse, a lot worse, because the debt keeps growing, and eventually interest rates will have to rise to attract buyers for all that debt. What happens when interest rates go to 5% to 6%? The interest payments become $1.8 trillion, $2.2 trillion. At some point, it becomes mathematically impossible. You can tax your way out of it because the tax increases required would destroy the economy. You can cut spending enough because politically protected programs, Social Security, Medicare, defense, make up most of the budget. The only option left is to print the money, and that is currency debasement. That is inflation. That is the destruction of the dollar's purchasing power. Now, people will say, but Charlie, we've been hearing these warnings for decades. The dollar hasn't collapsed yet. Maybe it never will. And that is a fair point. The dollar has been more resilient than a lot of people predicted. And there are reasons for that. American economic strength, military dominance, the depth of US capital markets, lack of credible alternatives, all of those things are real. And they bought us time, but they don't exempt us from economic law. They just delay the consequences. And the thing about delayed consequences is that when they finally arrive, they arrive with accumulated force. The longer you run unsustainable deficits, the worse the eventual reckoning. The more you debase the currency, the faster confidence evaporates when people finally lose faith. That is what happened to Rome. That is what happened to Weimar Germany, revolutionary France with the assignat currency. It is the same pattern every time. Slow degradation, then sudden collapse. I don't know when that moment comes for the dollar. Could be years, could be decades, could be sooner than anyone expects. But I know the direction we headed, and that is why Bitcoin is at $97,000. Not because Bitcoin became valuable, because people are starting to realize that unlimited money printing has consequences, that government promises aren't as solid as they once seemed, that maybe, just maybe, holding dollars isn't the safe bet everyone assumes it is. Now, what should you do with this information? That depends entirely on your circumstances, your time horizon, your risk tolerance. If you are young and you have decades ahead of you, I'd focus on owning productive assets, good businesses with durable competitive advantages, companies that can raise prices with inflation, real skills that will be valuable regardless of what currency we're reusing. If you are older and you don't have time to ride out a currency crisis, that is harder. Some diversification makes sense, some hard assets probably make sense. But I wouldn't bet my retirement on Bitcoin. I'd bet it on real businesses producing real goods and services that people need. And regardless of your age, I'd focus on not having a lot of silly needs in your life. One of the great defenses against inflation is not needing much. If you can live well on modest means, you are protected against a lot of economic chaos. I've lived modestly my entire life, not because I couldn't afford more, but because I don't need more. A good book, interesting conversation, meaningful work. Those don't cost much, and inflation can touch them. But here is what I wouldn't do. I wouldn't trust the government to fix this problem. Because the incentive structure, one, allow it, politicians who try to cut spending or raise taxes get voted out. Politicians who promise more benefits and defer the costs get re-elected until that changes. And I don't see how it changes without a crisis. The debt will keep growing, the money printing will continue, and the dollar will keep losing purchasing power. And Bitcoin will probably keep going up, not because it is valuable, but because the alternative is becoming less attractive. That is not a bull market, that is a distress signal. And if you are paying attention, you should be very worried about what it is signaling. Let me end with this. I've been called a pessimist for these views. People say I am too negative, too focused on worst-case scenarios. But I don't think I am a pessimist. I think I am a realist. I look at incentive structures. I look at historical patterns. I look at mathematics. And I draw conclusions based on evidence. Not wishful thinking. The evidence says that every fiat currency eventually loses its value. Every government that prints money beyond its productive capacity eventually faces consequences. Every empire that runs unsustainable deficits eventually declines. We not special. We not exempt from economic law. American exceptionalism does override arithmetic. And the sooner we face that reality, the better our chances of managing the transition to whatever comes next. Because something is coming. The pattern is clear. The signals are everywhere. The question is whether we be prepared or whether we be caught by surprise like every empire before us. That is what Bitcoin at $97,000 is telling you. Not that Bitcoin is the future, that the present is unsustainable, and unsustainable things, by definition, don't continue forever.